Okay, so like I earlier said, we are all aware of the amendment of the VAT standard rate from 12.5 to 15%, which has currently which is currently in use. So under the new value added tax 2025 Act 1151, um, what the act seeks to achieve is to reduce total tax liability of businesses. I think the new government had really drowned this in the ears of Ghanaians that they're going to put measures in place to, take out the COVID levy that was implemented some few years back after the pandemic. So currently, what the value added tax looks like, or what the VAT looks like under the new act, is that we're going to be having the GET fund and then the National Health Insurance Levy, which initially on every invoice you would see them decoupled. So we used to have them as 2.5% each. Then we used to have the COVID levy and then the VAT. Currently, the new act is saying that there will be no need to decouple them. So you can actually, on your invoice, you can straight ahead go on to compute 5% combined national health levy and GET fund on your taxable or the gross cost of your product, whether goods or service. So if we look at the work example that we have on here, the cost of supply for 10 laptops, for example, was 100,000 Ghana cedis. Now, under the new structure, it's saying that we'll be working a 5% on the cost of the laptops, which will be giving us 5,000 cedis, and then we'll also work or compute our VAT of 15% on the same gross cost of 100,000, which is going to give us 15,000. So our total tax liability comes up to 20,000 Ghana cedis under the new structure. So now I would want us to just do a quick comparison of the old structure and then the new structure so that we have a clear view on the benefits that businesses seek to gain or enjoy under the new structure. So under the old structure, let's say with a good that had a gross amount, or a product that had a gross amount of 150,000, businesses were expected to pay COVID levy of 1% on that 150,000, and that brings us to 1,500. You were also supposed to charge 2.5 national health insurance levy, which is 3,750. The same percentage is also applied on the GET fund. So then at the end of the day, you were also expected to calculate your 15% standard VAT on the new taxable supply or the new taxable cost of supply, which was going to be the 150,000 plus your 1,500 and then 3,750 and 3,750. So we calculate our 15% VAT on that new taxable amount and charge our VAT. So that brings our total VAT to 23,850, and our total invoice amount then comes up to 182,850. Now, under the new structure, this is how the same gross amount of 150,000 is going to look like. So we would be having our gross amount of supply at 150,000, and then would have 5% of national health levy and get fund, also bringing us up to 7,500 cedis, and then our VAT standard at 15%. Also, this time around, we are not calculating this on the new taxable supply. We are calculating it still on the gross amount of 150,000. So that brings our VAT standard to 22,500, and the total invoice cost is now 180,000. So under the old structure and the new structure, what we see is that a business was going to be bearing the total liability of 32,850 under the old structure, but then under the new structure, your tax liability is a 30,000. That is some savings on there for you. Also, the other thing is that businesses initially under the old structure were only able to claim the VAT paid, okay, the standard VAT paid. So under the old structure, you were only able to claim your 23,000 in this our example. You're only able to claim the 23,850 as input VAT in the case of purchases. So you only get to offset your tax liability with 23,850. The COVID levy of 1,500, the NHIL of 3,750, and get fund of 3,750 were all costs that the business had to bear, meaning that they were not reclaimable. But under the new structure, you have the government is saying that now you can actually claim both your VAT and then claim your NHIL and get fund. So you are going to have, under the new structure, you're going to have 30,000 cedis to offset your total tax liability at the end of the day, as compared to the old structure where you could only claim 23,850. Now, what other changes are we seeing under the new VAT Act? So we have, we know that the basic categories that we have under the structure are supply of services, supply of goods, and then sometimes supply of works. Now, under the new structure, what you're saying is that every business has to be VAT registered. Like, that is what we know. So under the supply of services, they're telling us that you do not need a threshold. You do not need a revenue threshold to be registered with the GRA. Every business, so long as you are into the supply of services, you need to be registered. And what they are saying is that you have to register, you must register within 30 days of commencing service. So if you started a business and you are into the supply of services, you are a hairdresser, you are into fashion, you are providing some kind of service, what the new act is telling us is that within 30 days of starting that business, you have to be registered for VAT. Now, we have also the supply of goods, and that is where an amendment or a slight change has taken place. So now for the supply of goods, there is a threshold of 750,000 Ghana cedi. So what the act is saying is that so long as your taxable supply is not up to 750,000, you are not mandated to register. And this 750,000 is actually for a period of a year, 12-month period or less. So long as you are making revenue within that threshold, you are expected to register for VAT under the new act. Initially, it was 200,000. You just needed to make 200,000 to be registered, but now there is a little bit, or let's say a lot of freedom for businesses. You know, we are now not mandated to register until you meet this threshold. But then there are some pros and cons to this threshold, which we will look at on the next slide. Okay, so as I initially mentioned, as a business now you have or a business that is into the supply of goods, you have a threshold of 750,000 to register for VAT. Now, this has been put into categories or different periods. This 750,000, it means that within 6 months, you are making a revenue of 375, or you are anticipating to make revenue of 375. We have the 3 months threshold, which is 187,500, and then a month threshold of 62,500. So what the act is telling us is that you don't necessarily have to wait till you meet the threshold of 750,000 before you register for VAT. The moment you access your business and you see that within a month, I am going to be making 62,500 or more, you have to make sure you get registered. So these are the categories. So within a month, if you see the business getting to the threshold or exceeding it, then it means that in the first month, you have to be registered. Same with the third month. If you see the business getting to the threshold of 187,500 within that 3 months, then it means that in the third month, you have to be registered for VAT. Same with the 6 months and same with the 12 months. So this is how the threshold for the supply of goods actually works. Now, what other amendments or what other change are we seeing in the new act? We have what we call the upfront payment, and this is a new rule for importers. Those of you that have businesses that are into importing of goods into the country for commercial use especially, this is a new amendment or a new rule that applies to you. Now, what is it saying? It tells us that 20% of your customs value of taxable goods at the time of payments, you are at the time of importation, sorry. So this is going to be an extra payment that importers would have to make, 20% of your customs value. And who is required to make this payment? Those businesses that you've exceeded the 750,000 threshold, but then you are not yet registered for VAT. So you are importing goods into the country for commercial purposes, but then you are not registered for VAT. And your goods or the value of the goods actually exceed the 750,000 threshold, you would be required to pay this extra 20% on the value of the goods you are importing. So like I initially said, what's the purpose? It's applied to taxable goods that are imported for home consumption and includes unaccustomed goods forfeited and auctioned. So that is the purpose. Then there is a note that I would also want to bring to the attention of everyone. It says that the upfront payment can be recovered. It can be recovered, and we will look at that on our next slide. Now, so before we look at how you can recover the upfront payment, we're going to look at who is not liable to pay the upfront payment. So first off, whoever is already VAT registered and importing goods into the country does not have to make this payment. if you are already VAT registered, you do not need to make this payment. This payment is only made by importers that are not VAT registered. But then, even with the importers that are not VAT registered, there are some people that are not liable to make this payment. And who are those people? The first category we have is people that are importing exempt goods. So goods that are going to be used for personal use, goods that are temporary, free zone imports, transit, etc. Any good at all that falls within an exempt import, you are not liable to make this payment. And then the second category is the relief import. That's import that is made by government institutions, diplomatic missions, goods that are below the threshold, um, privileged persons and companies importing goods below the threshold. Sorry, they are also not liable to make this payment. Now, this is how the whole payment works. Once you are bringing your goods into the country, the integrated customs for management system is going to be charging you. It's more like an automatic payment. The moment they if they receive your goods, they would first check the value of the goods. If it is within the threshold, then they are going to automatically apply this 20% on it when they verify that you are not VAT registered. So they are going to include a line on your bill of entry. It's the upfront payment for unregistered importers, tax code 101. It will be included on your bill of entry, and this 20% will be calculated. So it becomes an extra cost to you. And then if you are not liable, so in the this case of the exempt imports and the relief imports who are not liable to make this payment, you will then have to follow up, more like appeal the costs that is being charged to you and prove to the customs officers that you are not liable to this payment. That way, the charge will be reversed on your bill of entry, and you can go ahead to clear your goods and import them into the country. Now, after an unregistered VAT person or importer has made this payment, how can you reverse it, or how can you recover this payment? Now, there are 3 eligibility conditions, and you have to ensure that you meet all these 3 first before you go through the process of recovery. The first is that you have to provide evidence of the upfront payment. So then there has to be evidence that you actually paid the 20% on your customs value. Then secondly, you must now be registered for VAT. So remember, before you made the payment, you were not registered for VAT. What you have to do afterwards, after the payment, is to ensure that you get registered for VAT, so long as you are within the threshold. And then the third is that you should have filed the relevant VAT returns. So once these 3 eligibility conditions have been met, you can now go ahead to recover your payment. Now, how do you do it? You have to apply through the taxpayers portal, okay? And as you can see, www.taxpayersportal.com, and you put in the application via the recovery of upfront payment portal, and then you have a deadline. So the deadline is 6 months after the payment date. The date of payment to the time of application must be at at most 6 months. You must have put the application through, and then within 30 days, the commissioner will look at your application, and if you are truly eligible for a refund, your payment would then be refunded. So that is how you recover your payment. Our next slide talks about imported services or import of services. So when we say import of service, what are we talking about? We are saying that, first of all, when you are receiving service from a non-resident person, so anybody that is beyond Ghana or outside the shores of Ghana, we would term the person a non-resident person. So once you are receiving or you are being supplied service by such a person, you are importing services. Then next, a resident person from a business carried on outside the country. So the person is resident, the person is within the country, but the business that is supplying the service to you through that person is outside the country. So the moment you enjoy such a service from this person, even though the person is resident, we term it as an import of service. You are importing services into the country. A free zone developer or a free zone enterprise. If you enjoy the services of such a business, then we say that you are importing service into the country. Also, there's a key principle that we have to take note of. The tax does not necessarily apply to your whole imported service. It will only apply to the taxable supply. So some of the supplies are exempt, so they are not taxable. So that way we do not have to charge tax or compute tax on them. So you're only going to compute it on the amount of your supply or your import that is taxable. So there's also the process, as we all know, when you charge any VAT or you charge any tax, you are liable to actually file and make payment for that. So your first step is that you have to be registered on the imported services platform. You have to register for imported services via your taxpayers platform, and then you have to file for the import of service return. And this is due 21 days after the period in which you imported the service. So if you receive a service or if you import any form of service within 21 days, you have to file the returns and make payments for it with the Ghana Revenue Authority. So this is just a work example of businesses that are importing service into the country. So we have the first business, AZ Limited, who is importing service from Crown Agency at a tune of 100,000 Ghana cedis. So this is their tax liability, as you can see, and they'll have to file and make payment of this to the Ghana Revenue Authority. And then we have the second company, which is Bliss Limited, that is also importing services from Toronto at a tune of 100,000 Ghana cedis. But in their case, they are importing electronic communication services. So as we know, there will be the communication service tax of 5% that is going to be applicable. And that will be charged on the gross value of the imported service of 100,000. And then our VAT, our levies, and then our VAT will come to play. But one thing we have to note here is that the computation of the communication service tax is still the same. It has not changed. So you first apply that to your imports of service, then you are going to get a taxable value. that includes the communication service tax before you apply the levies and the VAT. Okay, so a guide to our VAT withholding. As we are aware, some businesses have the mandate from GRA to be withholding VAT withholding agents. So what they do is that they withhold on the VAT, and you are, as an agent, you have up to a tune of 7%. So you withhold whatever VAT that you have to pay to suppliers, you withhold 7% of that and pay that to the GRA. And then you pay the 8% to the supplier, who would then remit it to the GRA. So that is how it works. And once you are done withholding on a supplier's VAT, you have to ensure that you file this with the GRA by the 15th of the following month. So if, let's say, you are withholding by 18th of January, or today is 16th, let me 16th, you are withholding by 16th of January, by 15th of February, you are required to file this VAT with withholding, or the withheld VAT amount with the GRA. Also, you have to issue a withholding VAT certificate to the supplier, which actually proves that you or they have paid 7% of their VAT with you or to you. Now, as a supplier, if an agent withholds on your VAT, what's the benefits to you? You can use that to offset or reduce your final tax liability. So on the 30th of every month, or yes, 30th of every month, when you are filing for your VAT liability, you can actually use this VAT withheld, the 7% amount that was withheld by your customer, to offset your total tax liability. So it's going to reduce your tax liability. Now, we have businesses that are exempt in, as we know, in almost all the tax laws, there are businesses that are exempt. But how are you going to be exempt? There are conditions that has to be met. You have to be of good standing. And when we say be of good standing, we are talking about how timely your filings are and how good your records are with the GRA. So if you're a business and you are really being compliant, you file on time, you pay on time, you produce or you feed the GRA with very much accurate records, you can actually put in an application, and hopefully the Commissioner General will exempt you from such deductions or withholdings. Okay, so now there is a transition going on for some of the businesses that are proactive. They've already put things in place, but these are some few things that we have to take note of. And so under the registration status, the first rule is that all VAT registered taxpayers under the old law will remain registered. So if you were already registered under the old structure, you are still going to remain registered. The second rule is that service providers who were not previously registered are now required to register. Remember, I earlier said that for the supply of services, there is no threshold. So long as you are providing any form of service, you need to be VAT registered at least 30 days from the time that you started offering this service. Now, what is going to happen? I know I've been talking a lot about VAT, standard VAT, 15% and all that, but there's we are aware that there's also the flat rate of 3% and then that of 5% for real estate developers. Now, what is going to happen for them is that everyone is being migrated from the flat rate to the standard rate of 15%. So businesses that were initially under the flat rate scheme and were charging the 3% for the supply of goods, they are now being moved to the standard of 15%. So every business is now, so long as you meet the threshold for goods, you are now required to charge the standard VAT of 15%. And same applies to the real estate developers. Initially, they were taking 5%. Now they will be expected to charge a standard rate of 15%. And then the application of the new rate per the Act is the 1st of January 2026. So any business that from the 1st of January, any business from the 1st of January 2026 is expected to take this new structure. So I think as finance professionals, we have to ensure that our systems has been reconfigured, to meet this new structure and to ensure that we are up to speed. Okay, so bringing my presentation almost to a close, but then we want to look at this few, let me say, things that they were considered in the guideline as well. So how do we remain compliant as businesses? How do we remain compliant? I think somewhere last year, the GRA was hammering a lot that all businesses should, as much as possible, be registered onto their EVAT platform. So the businesses, all businesses that currently would fall within the threshold must ensure that they are registered onto GRA's VAT platform. Now, there are downtimes. I mean, I think we even encountered some today, a few minutes of internet issue here and there. It can happen in our everyday business as well. So what do you have to do as a business at a point in time where you are unable to process certain invoices, certain payments? What are you supposed to do? Now, let's look at the first scenario. The first scenario is when GRA system is offline. So the EVAT system is off, is not working, it is inaccessible. What are you supposed to do? It's saying that GRA has to immediately notify taxpayers of the issue that their system is offline. Also, the second thing, they will issue a signature key automatically to preferred customers. So they may send out certain unique codes to some contacts to help them go about their business. And then finally, they have to notify taxpayers when the system is restored. So that is it for the first scenario. Now, the second scenario, when your e-invoicing platform or software is offline. So there are some businesses that use their own e-invoicing platform and then they feed GRA with that data. So if you have your personal invoicing platform that you are using and it is offline, what are you supposed to do? The guideline is telling us that you have to immediately notify GRA either via an email or the helpline. And then also you have to upload all offline transactions once the connectivity is restored. So the moment you are able to fix your system and you are back online, you have to ensure that all transactions that took place while you were offline are fed into the system once it's restored. Your ERE or your POS system is down. That's our first scenario. What are you supposed to do? Same way, you have to notify the GRA, and then they will all also acknowledge and provide any feedback on the way forward on how to handle the situation. And then finally, when there is a planned system upgrade, you've got a new software or there is some kind of upgrade you want to do on your system, what you're supposed to do is to notify the GRA 24 hours before the upgrade. And I think that will bring me to the end of my presentation. I believe I've been able to capture most of the key amendments that were considered in the new value added tax 2025 at 1151. Thank you. Open for questions.
Thank you very much, Catherine. And thank you all to our participants for your attention so far. It's now time for our Q&A session. If you have any question, you can raise your hand. And as we go, you would be allowed to unmute yourself and then ask the question. We have some questions in the chat box, so I would want to start with that. Gifty Sonkwa Mills is asking, what transitional arrangements are in place for businesses that may struggle to comply immediately with the new VAT requirements?
Okay, so I think when you talk of struggle, I think we may have to put it a bit into perspective so we understand what kind of struggle we are talking about.
Okay, so Gifty, if you're listening, kindly be more specific with your question so that we know how to address it. And David Mensah is asking, what are the main goals of this VAT Act and what role did IMF benchmarks play in shaping the VAT overhaul?
Okay, so to answer the first question, I think when we took a look at the structure, the old and the new, I think one of the things we could identify on there is that it was really going to reduce costs for businesses, especially they that were on the standard VAT. It's now going to reduce a lot, or let me say, a marginal cost to businesses. So initially, businesses, like I had mentioned, were not able to claim their levies, that is their NHIO and their GET funds. So this was a one-time payment which came as a final cost to the business. But currently, they are able to actually reclaim that amount back to offset your tax liability. So there's some form of tax relief on there for businesses.
All right. And how about the second question? Can you speak to that? Whether I met the role to play?
I would have to hold on with that, please.
Okay. All right. Gifty, I see you wanted to clarify your question. So if you can hear me, please unmute yourself and then proceed.
Yes. Yeah, I hope you can hear me.
We can.
Yeah.
Yes.
Yeah, so I meant that these reforms being new, some businesses may face challenges such as updating the accounting systems to reflect the new VAT rules, some staff retraining, cash flow pressures, and uncertainty around interpretation during the initial implementation period. So I'm asking whether the Act provides any specific transitional reliefs or any grace periods or guidance to support these businesses while ensuring compliance. So more
Okay.
like the practical aspect of it.
Okay, Kitty, thank you. Unfortunately, there were no time frame, or let's say a transitional time frame for businesses provided in the guideline. I think the moment it came up in the budget, yeah, I think um, maybe the finance minister was expecting businesses to start prepping themselves to, transition. So there was actually no window for transition. But I believe that, as you mentioned, this is actually practical, and it's bound to happen. Having to reconfigure your system, and bring it up to speed with the new structure. It might take some time, but I believe that maybe the GRA would off books would have certain measures in place to, not to penalize businesses that were not able to start the transition right from the 1st of January. So that is what I believe. And of those, we may have certain structures in place.
Thank you.
Thank you, Catherine. Felix is asking how to use the VAT form and file VAT returns.
How to use the VAT form and
file VAT returns.
okay, I think this is on your GRE portal. So every business, the moment you are registered with the GRE, you are given a personal portal, so to say. You have the business has its own portal, and on there you can register for any type of tax, at all. So in the case of the VAT, the moment you register with the GRE and you have your portal, you go on there and you register for VAT. And that way, at the end, or when your VATs are due for filing and payment, you go on there. On your home screen, there is pending payments, and then I think pending liabilities. So under your pending liabilities, you should see your VAT tax item, and then you file from there, and then proceed to make payments afterwards.
All right, Felix, I hope that answers your question. Before we continue, we have shared in the chat box the VAT guideline document. So for everyone, it's the pinned comment in the chat box. So please click on the link, and then you can read more and then see exactly what the government expects and requires of you. Okay, Barbara Ayivo is asking, where goods or services are purchased from a supplier who is not VAT registered and therefore does not issue a VAT invoice, can the purchaser claim input VAT to offset the output VAT?
Unfortunately, you cannot.
Okay. And also she's asking how is VAT applied to the export of services under the Ghana VAT Act?
Okay, so I think under I think for the export, the guideline did not really capture that, but I should find out and revert on that.
Thank you. So once we have the answer to that, we'll try and reach you, Barbara, and get it to you. Okay, there are some hands that are raised. So we'll start with accounts. Kindly unmute yourself and then ask your question. And then after that has been answered, Gloria, you can do same. Thank you. Okay. if account is unable to, Gloria, if you can hear me, please unmute yourself and then ask your question. Okay, while we wait for both of them, at the beginning when we had the technical challenges, Akwesi stepped in to help with a few questions. Akwesi, if you can still hear us, can you please come back and then also share? There was a question that was pending before we started with the presentation. So Ama's question, if you can kindly help us answer it. Okay. Okay, if Akwesi is having issues, I think Catherine, maybe you can also step in. Amma was asking whether there is a threshold for manufacturing businesses and whether that includes food businesses as well.
Hello.
Yes, Catherine, can you hear me?
Yes, please.
Yes.
Please.
Hello.
Okay, hi, Akwesi, you're welcome.
Yes.
Yes.
Okay. So, to answer your question, I believe the manufacturing falls under the supply of goods. Okay, and if you watched Catherine's presentation, you realize that it's indicated that the new threshold for the manufacturing, or in the case of supply of goods, has now been moved from originally the 200,000 Ghana cedis to now 750,000 Ghana cedis. Now, the whole idea was to at least provide some form of relief, okay, to most businesses that do not fall under or that do not reach that level of revenue, within 1 year. So if within 1 year you're unable to, generate a total revenue that either reaches or exceeds 750,000 Ghana cedis, then of course you're exempted. But so long as your revenue jumps up to that level, then of course you fall under, the supply of goods, which means you would have to then apply the 20%, which is the 5% levies, and then the 15% VAT. I don't know if her question is answered. If not, we can still add more.
Okay. Amma, you can confirm if your question is answered, and if you have any follow-up questions, please don't hesitate. Great.
Thank you. I'm not sure that I understand that manufacturing a food business, for example, is under supply of goods. I'm not sure that that was the understanding I got from. So if that's what it is, then that's noted.
Okay, sorry. So the manufacturing that I indicated was actually those that produce things. Okay, so I think it wasn't very specific in relation to let's say those that sell food and all of that. But
Right.
even with that, if you sell food and your revenue or your inflow, within the year, so long as it exceeds the 750,000 or is within the 750,000 or is expected to get to 750,000 before the end of the year, then you still qualify to register as a standard VAT, payer within the GRE laws. Okay.
Sorry, my understanding was that per the GRE laws for manufacturing, there's no threshold. And that's what I want to confirm, and confirm the nature of manufacturing, whether it matters at all, or whether you are producing Tom Brown or you are producing flour, whether it makes no difference, or there are exemptions, etc. But my understanding is that for manufacturing, there's no threshold.
No,
You
I think
have
it
to be
was actually
registered.
for service. If you watch the presentation, you notice she indicated that there's no threshold for service providers, not for manufacturers. Okay. Catherine, is it possible to bring back the slides that talks about the thresholds so that we can be able to clarify that? Okay.
Okay, sure.
Right.
Okay.
I think yes. All right. So this is where or what I'm referring to. I don't know if we're all on the same page or.
Yes, but it doesn't mention manufacturing.
Yes, that's supply of goods. Okay. When you manufacture, it means you producing goods. Okay, that is the belief. When we talk about service, we're talking about intangible things. Okay, and then when you talk about supply of goods, those that manufacture, that is, you produce tangible stuff or tangible goods. So that is the difference.
Okay, I don't want to stretch it. Thank you.
You're all right.
All right. Gloria Answer is asking, what are the key VAT compliance requirements for a financial tech company?
Okay. That sounds a bit technical, but then I believe that so currently systems need to be updated. If we are to start from, excuse me, if we are to start from anywhere at all, financial or accounting systems need to be updated to capture the current VAT structure. So initially, we had our systems computing our 21.9% technically, a 21.9% tax for us. But currently, our total tax is coming up to 20%. So businesses, or let's say financial techs, if you are into I think developing of accounting softwares, managing of accounting softwares and all that, you have to, as much as possible, ensure that your systems and your software from the 1st of January 2026, or effective 1st of January 2026, is capturing the system or the VAT structure as it should be in Ghana. So if you have clients that are making use of your systems here in Ghana, then you have to ensure that whatever structure that they have in their systems it aligns with what the law says.
Thank you, Catherine. Gloria, please let us know if that answers you. Hilda is asking to clarify the example where withholding tax is mentioned. You had a slide that had withholding 7%, so that's what the question relates to. So she's asking whether it's a reduction from the old withholding tax of 7.5%, or if there's a new rule.
Oh, okay. So the withholding tax of 7.5% is actually that one is withholding tax. I don't know how to put it. So under the withholding tax structure, we have the withholding on services, we have the withholding of goods, we have the withholding on works, withholding on director fees, and what have you, commission from lotto agents, sales agents, and all kinds of withholdings. So that is where the 7.5 comes to play. So if I'm probably receiving a service from, let's say, RDK Consulting Service, which is into the supply of service, and I receive a service from RDK Consulting Services, I am mandated to withhold 7.5% of the gross amount. Do you get it? So I'm withholding 7.5 on the gross amount as withholding tax on services. and this will be remitted to the GRA. That this is VAT withholding, which is different from the general withholding that we know. So this is withholding only the 15%. This is withholding on the 15%. So if you look at the computation or the segregation, there you withhold 7% of the VAT value, and then you pay 8% of the taxable value. So that's the remainder is the 8%. So you pay the 8% to the supplier. So we know our 7% and 8% will add up to the 15%. So this 7% is only talking about the 15% VAT. It's not talking about the general withholding of 7.5, 5%, 3%, 10%, 20%, etc. that we know. This is VAT withholding.
Oh, okay. If I may, so just to be clear, if you get an invoice of 100 with 15 as VAT, no, with 20 as VAT, from that 20, you pay, you actually pay only 12% to the VAT, and then you pay 7% withholding, and then you pay the rest to the supplier. So basically, you have to add to your withholding tax declaration that 7% of VAT that you withhold.
Okay, so thank you for your question. The dynamics with this VAT withholding is that not every business can withhold. There are special businesses that they have this mandate from GRA to withhold this VAT withholding. So this is not a general rule for all businesses, or you have to be a tier 1 company or a tier 1 business to actually qualify to withhold VAT. So this 7% and 8% structure that we have gone through does not apply to all businesses. So as a business, or as a normal business, everyday business that we know, yours is to go by the 7.5 on gross value, as we know, and your 3% on goods, and your 5% on works. That is what you actually qualify for. This VAT structure is for tier 1 companies.
All right, thank you very much.
Thank you too, sir. And Tracy, I would like to also, I want to quickly visit the export question that came up. So the structure still remains the same for exporters. You do not pay any VAT on export. You actually, they are exempt. So they are exempt supplies. You do not have to pay. So there's no output VAT that is charged on it. But whatever VAT you pay at the end of the day to get your good to its finished state, you can actually claim them as input. So that is it with the export of goods and services. They remain at 0%.
Thanks for clarifying, Catherine. We have another question from Gloria Ansa. So to our audience, please, if you have any more questions, leave it in the chat box or raise your hand and you'll be called on to answer your question, to ask your question.
Hello, please. Hello, please, can you hear me?
Yes, we can hear you.
Yes, it's the question with regards to Barbara Ayivo's question that she asked about the when you go to a supplier or someone who supplies goods, and since the VAT regime that have changed from 200 to 750, some maybe that person is a supplier of goods, they are buying from them, but because of the threshold, maybe their annual threshold maybe 300 or 500. and they, as GRA said, it's not mandatory to register, it's voluntary. So the person decided not to register for the VAT. Now you also need that with what you call it, the VAT invoice to claim. What are you going to do? Since you can't claim that VAT, what's the way forward? It means that some businesses will be at a disadvantage. This is a real question that will come up, especially since the new VAT will have come into effect. Because I know someone whose annual turnover is 500,000. On the old regime, he was on that VAT rate, okay? But right now, they're switching to, have advised the person to do it voluntarily. But some of them will not voluntarily come on board. In this case, if you buy from them, there's no way you can claim you will not get a VAT invoice for you to claim your input. So it's a very, 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 very good. Although it's good, what we have, GRA and the government have brought up is good. But it's also going to cause some confusion here and there. Okay, thank you very much.
Thank you. Thank you very much. I think that's a very, very valid concern. It's very, very, very valid. I mean, if I were a business and my supplier is now having to enjoy this benefit, I would actually be concerned, because that is that's extra cost to my business. So just like you suggested, I think to safeguard your business as well, and to also ensure that you are within a good cost range. I think any supplier that does not voluntarily register because they want to enjoy the benefit of being below the threshold, I think it would be to the advantage of your business to probably look for a new supplier. That is, if the supplier refuses to voluntarily register with the GRA. But I think one of the things that came, yes, this particular slide, it did mention that the old VAT taxpayers, I mean, those that were already registered, will still remain registered. I know somewhere in the guideline, it did make a provision that eventually they may get to a stage where they might have to be registered. But I think as at now, they will still remain registered. So we are hoping that if they wouldn't have to get to the point of re-registration, and then probably GRA or the government to come up with a new structure where businesses can voluntarily register, so that I mean, we all would be in a better position to continue with our businesses.
Thank you, Catherine. I hope your concerns have been addressed. Yes, so we have, I think, 2 questions. Yes, so Gloriansa is asking, what are the VAT incentives or exemptions for a fintech company?
What are the VAT exemptions?
Yes, incentives or exemptions.
Incentives.
So she's asking, so first incentives and then exemptions, whether there are any.
Okay, I'll get back on that, please.
Okay. And also, how does GRA enforce VAT compliance on a fintech company?
Well, I think it would be the same for every business. I believe they actually do systems audit. I should believe that the GRA does that. So to ensure that these fintechs are also compliant as possible.
Our final question is from David. He's asking how this new reform will affect households and the cost of living in Ghana.
Okay. So, okay, I think, so let me take it from the standard point, that's the VAT standard rate. So initially, there was that extra cost of 1% COVID levy that, individuals had to pay, that extra payment that we had to make. But now there's that relief. So the ordinary Ghanaian would be enjoying a little benefit. But then I think when it comes to the other point, that is the flat rate. So individuals that were initially enjoying the flat rate. So let's say you live probably in an
Hi, Catherine. Okay, I think yes, Catherine has technical issues. Yes, but we are just at the end of the session. Akwesi, if you're still with us, can you share your thoughts on the comments, how this new reform affects households and the cost of living?
Yeah, hello, Tracy.
Yes.
Right. If you want to look at how it affects, then we would have to look at, or we would have to take it one by one. So, in GNBCC, we have a couple of SMEs that are part of our membership. And most of these SMEs, they do, of course, their inflows or their revenues within the year, most of the times, it's not up to the 750,000 threshold. Now, previously, they were forced to, charge additional 4%, which is 3% VAT and then 1% COVID, levy. Now, all that increased, the cost of their product, to the ordinary Ghanaian, and then also to the institutions or companies or the mats that they supply to. Now, with the scrapping of the VAT, with the scrapping of the COVID-19 levy, which is the 1%, that alone is going to change a lot of things because it's going to reduce, of course, the cost of items or products in the system. Number two, with the taking out of, previously we couldn't, enjoy the input VAT when it comes to the levies. The thing about the VAT was that it was made up of, in actual fact, it was made up of four things, which is the, the COVID, the NHIL, the GET fund, and then the VAT itself. Now, one component has been taken out, which is the COVID 1%. Now, technically bringing us to a rate of 20%, which is 5% for the levies and then 15% for the VAT. Now, apart from that, we are also now going to enjoy additional benefit of having to use all that is all the 20% as our input VAT, against our output VAT. Remember, in the payment of the VAT, you have to subtract your input VAT from your output VAT, and the difference you get is what you pay to the government. So it's not like, okay, when you charge, or you put VAT on your product, and then the money comes, you just have to automatically give that money to the government. No. So you need to look at the cost that went into it, the VAT that went into it, take those out, and whatever that is left as extra is what then will be given to the government. So, for me, I think it's going to help, with cost of business, and then also moving the threshold to 750. Also now, all those small businesses or medium businesses that do not reach that level, they are not obliged now to, charge VAT, except if they are in the service sector. And then, of course, that one, there's no threshold. So that, of course, that one you still have to charge. But for me, overall, I think it's going to help reduce the cost of product, which generally should help bring cost of living or cost of buying things down.
Thank you, Akwesi. Welcome back, Catherine. Do you want to add a few words to that?
I think RPC has actually handled that beautifully. So
Thank you. Thank you all so much. In the absence of any questions, we've come to the end of this webinar. Thank you for your attention, for staying with us to the end. And thank you very much, Catherine and RDK for okay. It seems there's a hand. Okay, so Barbara will take the final from you and then we'll officially.
Yes, it's with regards to my question on the export of services. So I'll be waiting for feedback.
okay, Barbara, I actually provided the response. So I said that there's no VAT taxable or charged on exports. So in as much as it wasn't captured in the new guideline, it still remains as it was. So it's an exempt supply. It's treated as an exempt supply. You do not have to pay VAT on your exports. But then, should you pay any VAT on any purchases that you make to produce your final goods, you can actually claim them as an input VAT. So more like a relief or a refund to the business. So I think government is actually more exports.
Yeah, thank you very much.
You're welcome.
Okay. I believe we're done now. All right. So thank you so much, Catherine. Thank you to the RDK team. And also thank you so much, Akwesi, for stepping in. We have shared in the chat box GNBC's contact details. Please feel free to reach out to us if you have any additional questions or queries. And our website is also there. Check out GNBCC, see what we are up to and how to reach us. Please would also entreat all the businesses here, if you're not a GNBCC member, to join the membership, because we have access to other members who might be beneficial for your business. And we also have various projects that you might benefit from. So please stay updated on GNBCC. And we've also shared a link to our newsletter. Please subscribe so that you are updated on what is going on within GNBCC and also within the ecosystem and the space in general. Gloria, you're asking how to join GNBCC. Please send an email to info@gnbc.net. So the pinned comment, send an email to gnbc.net and then we'll share with you the steps for registering as a GNBC member and all the benefits you can claim as a member. So we are now officially at the end of the program, of the webinar. Thank you all so much for your attention. Please react so that we see how you're feeling at the end of this session. And I hope it's been very informative. The guideline document is also still in the chat box. So kindly use that and then get more information from that. Our membership form has been sent to the chat, Gloria, so you can click on that and then register to become a GNBC member. And for every other person who is interested, please make use of the link that has been shared right now. All right, so we are done. We appreciate you all for being here. And I wish you the best with your business. And I hope that we are able to smoothly hop onto this system and everything is fine for our businesses. I wish everyone a prosperous 2026. Thank you all so much for joining us. Enjoy the rest of your day.